I have made thousands of dollars in crypto following these 3 simple trading indicators that, in my opinion, have had a major impact on my trading because it keeps me responsible. It doesn't let me get greedy. It doesn't let me become too fearful. And overall, I found, at least in my experience, that these have been very, very reliable, at least from trading on a macro kind of big picture level. So I want to share these 3 with you today. I would love to hear your comments in the comment section below if you have found, if you've used them and you found them useful, if you have any questions that I'd like to clarify, anything like that. Of course, I am here to help, but I'd love to share these with you and get your thoughts and takes on them, because I, of course, have done very well and had quite a decent bit of success using these, and so I did want to share them with you. So moving on, let's go on ahead and we'll dive right in. I wanted to show you an example here on Solana. So the first 2 of the 3, we've got kind of 2 different places we're going to look for these 3 indicators. The first 2 is going to be a combination of the Bollinger Bands as well as the RSI. So you can see here we have the RSI down in this bottom area, and then we have the Bollinger Bands are kind of this like cloud thing that kind of moves around price. So I wanted to show you essentially kind of how I have set up my chart, and then you can kind of draw in anything else that you need from there. So first off, you can see we are looking at the daily candles. For those of you who are not familiar with candles, candles are very useful, and they're a little bit more expressive than a line chart, because you can see on an individual given candle, like we can just look at this one right here, it will show you the open, the high, the low, and then the close right here. So it's a lot more expressive in terms of telling you exactly what happened to price. And it can be quite useful, particularly with using the Bollinger Bands to determine some various important things, in my opinion. So generally what I have found is if you see that price is overextended and it closes outside of the Bollinger Bands, the further it closes outside, the kind of more dramatic you would expect the move to be. Then usually it means, because Bollinger Bands kind of by definition are like a percentage of how likely price is going to be within a certain range, right? I don't know the exact percentage, but basically they're saying we're thinking within a very high percentage that price should be below this number and above this number. And if it happens to be below or above that number, it's essentially a highly unlikely probability that the price should be there in the first place. And so what I have found generally is that it actually is a pretty strong indicator that you are going to be seeing a move back. Now, of course, it's not always a guarantee. You can see here, this candle did close outside of the Bollinger Bands. And what do you know? This candle also closed outside of the Bollinger Bands. So it's not always a guarantee that it will immediately come back in, but it usually means you're getting to a level in which you should probably be expecting a pretty significant move back, at least to the means. Sometimes you can even see back down to the bottom of the Bollinger Bands, as we did see in this case. This would have been an absolutely fantastic time to enter a short, at least write it down to the mean here, or potentially go back and look to be hitting at this lower Bollinger Band level, at which you could have potentially bounced in long here. However, there is a second piece that I like to essentially look at together to maximize kind of the highest likelihood chances of something happening, and that is the RSI. The RSI essentially shows you how overbought or oversold something is, and if it is over this line, you can see right here in the green, this is meaning that RSI is pretty overbought here. And so what I am generally looking for is a combination of both the RSI being overbought or oversold, as well as price, again, closing outside of the Bollinger Bands. So for example, in this case here, I would have not been looking to take a long because 2 things didn't happen. 1, price did not close outside of the Bollinger Bands, as well as we did not see price get oversold. So this is not some time that I would have been looking to enter a long, but I most certainly would have been looking to enter a short here, because we see price overextended. We also see Bollinger Band overextended here as well. You could even have entered at this point in time, and of course you would have seen price continue to ride up a little bit, but it would have quickly fallen down within 2 days. The price would have been lower than when you got in at, if you were to enter kind of at the exact top of this close here. So we can go back, we could take a couple more looks here and see that this is a fairly common, or it's a fairly high probability of this type of thing happening. So here you can see we have both price closing outside of the Bollinger Bands, as well as RSI indicating oversold here. You could have entered here. Of course, you would have fallen a little bit lower here, which may have scared you. And of course, if you are trading with leverage, this could have been a pretty difficult trade, at least from a timing perspective. But if you do look, we see this really, really strong pop. We do not get to the upper Bollinger Bands, but we do return to that mean, as we have talked about before. So, again, not always like an exact guarantee of when you will see a turnaround, but it's usually highly likely that it will continue at some point. You can see here there were 3 days in a row where we closed outside of the Bollinger Bands, and RSI was overextended to the downside on all 3 of those days. So you could have potentially entered here, maybe even doubled your position here as you continue to see it kind of move down, as well as seeing the price remain overextended. And then even just a few days later, you would have been feeling really, really good about that decision. So again, there's another example going on here. You could have seen something similar right here. Price just barely coming in overbought. You also could see closing outside of the Bollinger Bands. You do see price continue to rise quite dramatically, right? So I'm not saying that this was the Pico top, but this would have been a great place to enter. And then of course, what do you see? A major macro downtrend, even getting to the point where you could have gone long in this range. But of course, you would have made it quite quickly back down to this kind of mean level, as we do talk about. And even further past that, you would have made it to the bottom of the Bollinger Bands down in this range. So definitely, again, another pretty clear indication of what was going on here. Now, again, in this position, you can see RSI overbought, but we are not peaking outside of the Bollinger Bands. Now, of course, this would have been directionally a good place to make a trade, but it did not hit our level here. Now, of course, we did see it hit our level here, and then we did, of course, continue to rise and then go back and hit the level, but this would have been kind of an overall net losing trade. So of course, you're not going to lose them all, or you're not going to win them all. If it were, that's just kind of not how trading works. But at least so far, of the ones that we have looked through, it's been a very, very high degree of success here. So hopefully you found these kind of first 2 indicators useful. I, of course, as I mentioned, do like to use them together. You can use them individually if you want, as you may have found some patterns that I was not mentioning here. But the last one that I wanted to show you is the Bitcoin liquidation map. Now, of course, this actually can go through many different ones. If you want to be looking at Ethereum or Solana, any of these others, feel free. I generally tend to stick primarily to Bitcoin. Sometimes I'll look at Ethereum as well, because Bitcoin has the deepest liquidity. I mean, it's the biggest kid on the block. It drives a decent chunk of the volume. It of course drives a decent chunk of the open interest total in crypto. I think it's about 40% of the total open interest within crypto. So this is of course, a very important chart to look at. Even if I'm looking to trade on, let's say, Ethereum or Solana, I will be looking at the Bitcoin exchange liquidation map, because generally, at least until recently, everything has kind of been moving off of Bitcoin. We have seen Ethereum, at least recently, start to defy that trend at least a little bit, but this is still, I do think, it pulls its weight. So what we can see here on the liquidation map is this is essentially a map of where the liquidations lie and at what prices. So you can see here, if we were to see price move down to about 111,000 on Bitcoin, 111,744, we would see about $957 million liquidated. Now, if we were to move up, and let's just say we were to move back to about 116,266, that would liquidate about $2 billion of shorts. So it kind of shows you like where the most liquidity is moving. Now I have, if you're new to the channel, I have this belief that essentially liquidity is a magnet, because we have market makers. Market makers make a lot of money off of liquidating people, and so it's kind of a magnet pulling them to push price in that action, in that direction where possible. And so what we could see, at least in this 1 day time frame, there is definitely a magnet pulling us back to the upside. Now, of course, we have seen, at least as of the time of this recording, we've seen a pretty consistent sell-off on Bitcoin, and so we've seen so many longs liquidated over the past couple of days, and people in addition are starting to pile in on shorts because they're getting more bearish on the market. Now, the other thing though that I need to stress and make very clear is I'm not just looking at one time frame. There are 3 time frames here, and so for me to feel confident in taking a trade, I'm usually looking for confluence of all 3 time frames, and I'm moving in the opposite direction. So for example, you can see here there's definitely a bias towards liquidating shorts, which would indicate a move to the upside, which means I would want to be entering long. But I'm not going to unless I see the same thing out of the 7-day and the 30-day. So let's go take a look at the 7-day. On the 7-day, we can see an absolutely massive magnet pulling us here to the upside, liquidating shorts. We can see here up at the top, if we were to move to about 125,000, which is not far off where we were even just like 10 to 14 days ago, again, as of the time of this recording, that's $12.5 billion. You can see very clearly how much short leverage has piled in to the crypto market, as well as how much long leverage has left the market. If we were to move down to 101,000, it would only liquidate about $2.5 billion. So again, there's a really, really strong pull to potentially move us back to the upside, because again, there's so much more in liquidations to be had moving up. So now you can see that we have 2 of 3 sitting in confluence. Let's look at the 30-day. Well, actually, from the 30-day, we can see something very similar. We can see another really strong, not as strong as the 7-day, but another really strong pull to the upside, where if we were to hit about $130,000, about $13.7 billion would be liquidated. You can see here to the downside as well, about $6.5 billion. So again, a very, very strong move to the upside. However, it is also important to look at the slope of kind of this line as it moves up. You can see that there is still about $4 billion to be liquidated if we were to see a move down to about 110,000 on the Bitcoin chart. So there is always the possibility that, given that essentially, kind of the magnitude of price moving down is so much more lucrative than the magnitude of price moving up, we could see a little bit of a jump down and then a move back to the upside. That is not always guaranteed. We also do not know exactly when something like this would happen. But if I were to be looking at this right now, we have seen all 3 are indicating that it would make sense to jump in on a long, because again, the liquidity is pulling the market makers to the upside to liquidate the shorts. But if I were to enter a long, I would probably want that liquidation point or that stop loss point, kind of based on however you trade or what your trading strategy is. Again, I'm not here to offer advice on that. I would be looking to have that stop loss point a decent bit below kind of this major hike in liquidity. I would want to see probably about 110,300, maybe even just straight up 110,000, maybe even a little bit below that, because 110,000 is such a psychological number. Maybe if we're like in the high 109s, you should have a decent bit of room and a decent bit of kind of wiggle room to make sure that you're not getting wicked out on some like liquidation push, essentially. So those are essentially the kind of the 2 main charts and the 3 main indicators that I use to go ahead and trade in crypto. Like I said, I found a lot of success using them in confluence with each other. Whenever all of them are saying the same thing, again, this is just my own kind of like anecdotal experience, but whenever all of them are saying the same thing, it's basically like shooting fish in the barrel, at least as I have found. Of course, you need to make your own decisions with that. I cannot offer advice with that because, of course, I have spent a lot of time and I have spent a bunch of money learning how to trade profitably in this type of market. So you, of course, probably should be doing the same, and just make sure that you are being careful. You're exercising risk management. That is one of the key things that you have to do regardless of your skill of trading, is you have to make sure that your risk management is correct. And then, of course, you can start to learn from there. But overall, hopefully you did find the information in this video useful. If you did, of course, a like and a subscribe does help me. You also can press that notification bell so you can stay up to date with all of the videos that I am making here in the crypto market or about the crypto market, trying to stay up with all of the crazy things happening. Because if you've been in the crypto market for any amount of time, you do know that things move about a mile a minute here. So trying to keep up with all of it. Also, if you have any comments, questions, anything like that, just drop those in the comment section below. And if you are looking for a really great place to trade because you want to try out some of these strategies, you can use my link in the description below to BTCC. They do have a 10% bonus on first-time deposits, as well as up to $10,055 in deposit bonuses, as well as a demo trading account. So if you're wanting to get signed up, but maybe you're wanting to kind of dip your toes in, not do anything too crazy, they do have a demo account so you can kind of get up to speed before you're actually putting real money at risk, but you can still take advantages of those incredible bonuses, and those are only if you do use my link in the description below. They're a really, really good deal. So if you are interested, feel free to check that out in the description below, as I did mention. And then thank you so much for joining in, and we'll see you in the next one.